Fighting tax evasion and fraud is high on the EU finance ministers' political agenda. Today at their meeting in Brussels, they agreed to introduce a binding anti-abuse clause in the parent-subsidiary directive. This directive aims at ensuring that profits made by companies based in more than one member state are not taxed twice. But it has been abused by certain corporate groups to avoid paying taxes in any member state.
This clause will prevent misuses of the directive and ensure greater consistency in its application to different member states.
To help member states clamp down on tax fraud and tax evasion, ministers also decided to extend the scope of the automatic exchange of information between tax authorities to include interest, dividends, and account balances. The dual aim of this measure is to prevent taxpayers from hiding capital abroad or from hiding assets on which tax is due, whilst also improving the efficiency of tax collection. A third important agreement was reached to implement regulation defining the contributions and to be paid by banks to the EU Single Resolution Fund. The fund is to be used in cases of bank failure and is a key element of the Single Resolution Mechanism. Finally, ministers also discussed the Commission's €315 billion investment plan to kickstart the European economy over the next 3 years. The plan will be submitted to EU leaders for approval when they meet next week in Brussels.
Welcome.